You've probably heard about treasury bills, but what about bonds? Are they safe? Do they pay more? And most importantly, would you invest in them? So if you're looking for a smart way to grow your money long-term with steady returns, then you are in the right place. Today, I'm breaking down everything you need to know about bonds, from how they compare to treasury bills and how you can start investing in them from right here in Nigeria. Welcome back to Most Brief, your exciting morning talks where we break down finance into simple, practical steps. My name is Moral. So what are bonds? Bonds are like loans you give to government or a company in exchange for regular interest payments and then the full repayment of your money at the end of the bond's term. So they're a good way to build wealth, and they're quite less risky than stocks because they pay you regular income as interest while still keeping your capital intact. So what are the types of bonds? We have the sovereign or government bonds. Now these are bonds that are issued by national governments like the Nigerian government bonds, the US Treasury. These bonds are considered low risk because they are backed up by the government. We have the subnational bonds. These bonds are issued by state or local governments. We also have the corporate bonds. Now there's a range of bonds in this category. These are bonds that are issued by corporations, and they range from investment grade to the high risk bonds. Then we have the international bonds. These are the bonds issued by foreign internationals, and they incorporate currency risk in. Government bonds of Nigeria are bonds that are issued by the federal government of Nigeria, therefore they're backed up by the government, and so the risk of default is nearly non-existent. And what are these type of bonds? There's the FGM bond. This is the long-term bond, typically from 5 to 30 years. It pays interest semi-annually, twice a year, and the auction typically occurs every month. So for January 2025, for the 10-year bond, the rate that it closed at was 22.6%. But there's also the savings bond. So the savings bond is targeted at small investors. So with as little as 5,000 naira, you can subscribe to the FGN savings bond, and the auction typically occurs every month as well. So the duration for the savings bond is 2 to 3 years. For the last auction in January 2025, the 3-year bond closed at 18.99. In fact, at the moment, the subscription for February 2025 is open. It opened on the 3rd of February and it's going to run through to the 7th of February. So if you're interested in subscribing to FGN savings bond, then the window is still open. And if you miss this one, not to worry, it happens every month. So the FGN savings bond pays interest quarterly. So it pays interest 4 times in a year. So there's also the FGN green bond. Now the funds from this bond is usually funds eco-friendly projects like the solar energy, and then there's also the Sukuk, FGN Sukuk. Now FGN Sukuk is for the Sharia compliant investors that offers shared profit instead of interest. And then again, Federal Government of Nigeria also issues Euro bonds. FGN raised dollar, so this is also another opportunity for investors who want to earn in dollars. So you can invest in the FGN dollar bond where you can earn in dollars as well, and the rate as of the last auction held in August 2024 was 9.75%. So the advantages of FGN bond is that it provides a steady, predictable return, so which is perfect for conservative investors who want that stability in their income. A credit rating for Nigerian bonds at the moment for Fitch is B-. The lower your credit rating, the more investors demand as premium for the risks they're being taken. However, as for Nigeria, FGN bond still remains one of the safest forms of investment because it's backed up by the Nigerian government. So people usually ask, should I buy treasury bills or FGN bonds? So here are the difference. Now T-bills is a short-term instrument for usually within a year, sold at discount, and you get the full amount at maturity. It does not pay periodic payments. Bonds, on the other hand, are a longer term instrument. and they pay periodic interest over the life of the bond. So if you're looking for something quick within a year, then by all means T-bills is more appropriate for you. But if you're looking for something longer and with steady growth, then FGM bond is a more appropriate. So corporate bonds are bonds issued usually to raise capital by these companies. They usually offer higher rate of return, higher yield than federal government bonds, because they're considered riskier than federal government bonds. What are the characteristics of these corporate bonds? So they're issued by these organizations to raise capital. They usually have a higher rate of return, higher interest rate compared to government bonds, because they're considered riskier, so they pay premium for that risk element of the bond. So it is advisable that you check the rating. So this graph shows the yield for FGM bond, the 10-year bond in particular, from 2020 to all the way to 2025. You can see that it has been moving steadily, and in January 2025, the 10-year bond closed at 22.14%. So the corporate bonds, like I said earlier, usually offer a risk premium higher than the government bonds because of that risk element. More spread through the primary market and the secondary market. So through the primary market is done by the Debt Management Office in collaboration with the Central Bank of Nigeria. So you go to the primary market money makers. Above is the list of these banks that are licensed to carry out this, about 14 of them. So you can go through any of them if you want to buy FGM bonds through the primary market, through the secondary market, through the FMDQ platform and the Nigerian exchange. You can also buy through companies, asset management companies. You can also invest in bonds through fixed income mutual funds or the ETFs through the Nigerian. Answer these questions. Do you want a steady return? Do you want a low risk investment? And would you want to invest in an instrument that is backed up by the government? If you answer yes to all these questions, then yes, bonds might be a best fit for you. However, if you want a potentially high return and you don't mind ups and downs of the market, then stocks might also be another good fit for you. Your comments down below. So in our next episode, we're going to explore the world of stocks and see how it fits into your investment goal. So if you found this video helpful, please share, like and subscribe to Most Brave for more exciting money talks. Until next time, bye for now. Stay financially fabulous and keep growing, guys. Bye.